Well, there we have it. The Fed has finally cut interest rates. They cut them by 0.5%, more than double what was being forecasted. Let's talk about it. Welcome back to Trades and Trends. I'm your host, Kyle. Today's date is Wednesday, September 18th, 2024. Jerome Powell came out and said that inflation is well on its path down towards 2%, and that the labor market is starting to show some signs of weakness. So now is the time to finally cut rates and pivot. Now, personally, I was a bit of a believer that we may not have seen the Fed cut rates throughout the rest of 2024, not until 2025, or maybe not at least until the very end of 2024. But of course, I was very data focused, and as long as the data supported that, then I was going to stick to that expectation. But we started to get more and more labor and job related data that started to show that the job economy and the job market is not quite doing as fantastic as it was towards the beginning and the middle of the year. And then we even found out that some of those numbers that we were getting towards the beginning and the middle of the year were not very accurate at all either. So there was some weakness there all along. I don't think it's weakness to the point that it's now too late and we're on a slippery slope and we're going to have to be playing catch up. Potentially that might be what some participants are feeling after seeing a 0.5% cut, not just a 0.25%. We're kind of left with two questions. Did the Fed cut by 0.5 percentage point because they feel that we're doing really well in our fight against inflation at this point? Or is it because they are a little bit worried about where the job market and unemployment and those types of statistics are headed? So we will have to continue to get more data and graph out those future plot points to determine which one of those ultimately it will end up being. We can't forecast that precisely from this point on, but we can start to get an idea of at least what the Fed is thinking of. And so Jerome Powell suggested that we should see 2 more rate cuts between now and the end of the year. So I'm suspecting that those are going to be 0.25% cuts. We started off a little bit stronger just to get the ball rolling, see how the economy reacts to it in the next month or two. But I think over the next month or two, or at least until the end of the year, probably really, so the next 3 months, 3.5 months, I think the Fed will be taking it a little bit slower just to make sure that they haven't overdone anything. So now that rates are cut, though, what are we going to be looking out for? Well, we're going to be looking for high yield savings accounts interest rates to be coming down a little bit. We're going to be looking for mortgages to be coming down a little bit more. And those have already made pretty good progress. They were almost 8% at one point earlier in the year, and they're now down to about 6.3, 6.4%, I believe. So while all that is being changed, there will probably be some rotation of money throughout the economy as well, as those high yield interest rate savings accounts and CDs quit paying out as much as they were at one point. We'll see money flow out of those. And as mortgage rates come down, are we going to see a direct correlation with housing prices going back up even higher than they are now again? Time will tell. I am excited for the times ahead, though. In very recent videos, I suspected that we might be hitting new all-time highs here very soon. And not only did we hit new all-time highs yesterday, but we even went on to spike into all-time highs very strongly today on the news of a 0.5% interest rate cut. Now, I think if we only got 0.25%, the market has already pretty well having priced that in. So I think that would have potentially been a little bit of a buy the rumor, sell the news type event. But when we got the 0.5%, it was only being estimated to have about a 35% probability of happening. And so that was a bit of the unexpected move. And markets seem to, at least for most of the day, react pretty positively. Now, on the S&P 500 specifically, we have sold off most of those intraday gains already, and now we're leaning just a little bit into the negative. But I'm confident from here on out for the immediate foreseeable future that we will continue rising up. It might be a little bit of bumpy road. We still have some volatility that we're dealing with, a little bit more than usual, but I do believe that the markets will ultimately react bullish to this news, to this action, until there's data to suggest that cutting interest rates, especially by this amount, is not having the effect that is intended by the Fed. Now, something I'm having a hard time wrapping my head around, not too difficult because it's somewhat of his standard character, but Trump is now jumping back on the Fed and saying, well, they're only cutting because the economy's weak, because Biden and Harris economy is so weak. That's the reason that we're having to cut, which just blows my mind, because this is the same guy who during his tenure was saying, how dare you not cut interest rates lower? Our economy needs to be booming. Our economy is struggling. The Fed needs to be cutting rates, and he was trying to bully Powell. Either way, Powell didn't fall for it then. He's not going to fall for it now. There's plenty of evidence going back the last decade and a half showing that the Federal Reserve is not going to be bullied by political candidates and whatever agenda they have. They're going to keep focusing on inflation and doing what it is that they do. So Trump can tout all he wants about how the economy is weak and that's the only reason we're having to cut rates. And meanwhile, Jerome Powell is saying the economy is maintaining, it's holding. We're cutting rates because the fight against inflation is going as expected. And so now he has determined it is the appropriate time to cut. I really strongly do not believe that this has anything to do with upcoming elections, political candidates, whatever. I really find it hard to agree that anybody is basing their voting decisions, let alone the Electoral College is basing any of their voting decisions on whether or not the interest rate is 0.5% or 0.25% or however much higher or lower than whatever it was months ago. That's just ridiculous. I'm not on board with that at all. So I'm completely disregarding that. If Trump ends up winning and he gets in office, he'll go a full 180 and he'll say, Jerome, how dare you not cut rates? I want the best economy that we can get. Our economy is strong, but it could be stronger. So go ahead and cut those rates as low as they can go. And he's going to want them all the way back down at 0.25%, if not zero, if he could argue for it. So I don't hold any value to that. He's just trying to use this as a sales pitch of, well, it's Biden's and Harris's economy that's so weak that is the reason that we're having to cut rates. It's some of the statements that that man says, I just am shocked that he doesn't see the irony in them himself. So now that this big, long waited for event is out of the way, we can go back to paying attention to regular economic news, plotting out where future trends may end up heading towards, and then making trading decisions based on that. So for now, though, I'm staying in. I'm long and strong, and I think we're going to see more and more all-time highs here in the very near future. Just have to sit out this little rough patch. So that's all I have for today. Thank you so much for watching. Please consider liking and subscribing. Your support means so much to me. I will see you all very soon.